Weed stocks have been a stock picker's sector so far. The past few years have been the best of times and the worst of times in the markets, but especially for weed stocks. The split has been largely geographic. In this video, we will tell you about the 10 weed stocks to buy now. Number 10. Curaleaf Holdings, Inc. CURLF. Even some of the best marijuana stocks to buy currently operate at a loss. During the third quarter, this consumer cannabis product company brought in more than $317 million in revenue, a year-over-year gain of 74%. But its loss widened from roughly $9 million last year to nearly $57 million this year as higher tax, interest, and other expenses outweighed higher operating income. At the largest publicly traded marijuana company, Curaleaf has advantages that smaller players don't. Bigger names in the industry are better placed, says Kunal Sawhney, CEO of Calkine Group. One, because their scale can allow them to overcome pandemic-induced supply chain disruptions like closed borders. And two, because in the event of any wider correction, they will bleed less than ones with weaker fundamentals. Number 9. Organigram Holdings, Inc., OGI. Another company involved in the CBD market is this cannabis producer that has invested in producing the compound via biosynthesis. The process uses yeast strains and enzymes to create cannabinoids without growing them in plants. This has the potential to create a scalable supply of pure cannabinoids at a fraction of the cost of traditional cultivation, Jacob says. In addition to CBD and the high-producing cannabinoid THC, the private biosynthesis company, Organigram, has invested in and has demonstrated and applied for patents for production of minor cannabinoids that are too expensive to produce with traditional cultivation. Number 8. Aurora Cannabis, Inc., ACB. In its most recent quarterly report, this medical and recreational cannabis company reported its medical cannabis net revenue rose 23% year over year to $41 million, making up roughly 70% of its total sales. Its international medical sales were particularly impressive, rising 146% from the prior year quarter as the company continued expanding in high-margin medical markets such as Israel. Overall, its medical margin rose to 64%, double that of its consumer division. Although the recreational market is generally faster growing, Aurora's strength in high-margin medical sales allows the company to capture more growth than many of its competitors, says Jay Jacobs, head of research and strategy with Global X, which runs the Global X Cannabis ETF, POTX. Also, the company's dominance in the medical cannabis space could insulate the company against volatility in the overall cannabis market, he says. Number 7. Tilray, Inc., ticker TLRY. Tilray's merger with Aphria creates the largest cannabis company in the world, or so Tilray says. Looking closer, the claim, based on total revenue of the two companies, is a bit thin. Big chunks of that revenue comes from Aphria's ownership of a German distributor, whose sales are not all of cannabis, and Georgia-based brewery Sweetwater Brewing. In terms of cannabis-only revenue, Tilray isn't quite the leader. Still, the merger does look intriguing. An estimated $81 million in cost synergies will be important in an industry that still needs to reduce expenses. Scale in Canada matters. Assets in Europe and the U.S. promise greater international growth going forward. Tilray is keeping respected Aphria Chief Executive Officer Irwin Simon as the leader of the combined company, a seemingly smart choice. Investing in cannabis is a bet that Congress will legalize the drug, says Jim Higdon, co-founder of Cornbread Hemp. For investors committed to long-term investments that will pay off upon federal legalization, a company like Tilray is making the right moves to indicate a clear long-term vision for what a post-prohibition cannabis company might look like, he says. Number 6, Green Thumb Industries. Green Thumb Industries, OTC, GTBIF, owns retail cannabis stores in 12 states across the U.S. and operates 13 manufacturing facilities. Green Thumb holds licenses for 46 retail cannabis locations, but has opened only a little over half that many stores. With the legal recreational marijuana market in Illinois opening for business at the beginning of 2020, this company is benefiting from tremendous growth in its home state. Along with the opportunity to expand into additional states such as New York and New Jersey, the company has significant growth potential. Number 5, Trulieve Cannabis. Not everyone thinks investing in the cannabis industry has to be predicated on federal legalization. The key to investing in cannabis for 2022 is to stop waiting for the federal government to do anything and pick companies that can attract capital because they have proven solid management and created a dominant position to operate successfully in a state-by-state environment, says Michael Sassano, CEO of Somai Pharmaceuticals. He points to Trulieve's, which operates in 11 states and has leading market positions in Arizona, Florida, and Pennsylvania, as an attractive potential cannabis investment. They aren't spread too thin, and when banking does occur, rather than clean up their balance sheet like others, they will be expanding, Sassano says. Trulieve Cannabis is a cannabis grower and retailer that focuses primarily on the Florida medical marijuana market. The company dominates in the Sunshine State by accounting for nearly 50% of total cannabis sales and has been consistently profitable since 2017, an achievement few other marijuana companies can claim. Its sales and earnings also continue to soar. Trulieve plans to acquire Harvest Health and Recreation, OTC, HRVSF, in a deal that will boost its presence in several other states and make it the most profitable multi-state marijuana business in the country. Number 4, Innovative Industrial Properties. U.S. cannabis companies can't easily secure capital from banks or financial institutions since marijuana remains illegal at the federal level. Innovative Industrial Properties, IIPR, helps to solve that cash shortage for growing marijuana companies by buying properties owned by U.S. medical cannabis operators and leasing those same properties back to them. The property sale to IIP provides the cannabis operator with much-needed cash, and the lease agreements create a steady revenue stream for IIP. The COVID-19 pandemic disrupted IIP's business somewhat, with 3 tenants receiving temporary rent deferrals. The ancillary company has still grown phenomenally during the pandemic and is highly profitable. Because the company is organized as a real estate investment trust, IIP returns at least 90% of its taxable income to shareholders. Number 3, Grow Generation. Again, weed stocks in the U.S. have done far better than their Canadian counterpart. And of all the major weed stock, none have performed better than GRWG. This operator of hydroponic gardening stores has seen its stock rally 828% over the past year, and a staggering 1,800% since the beginning of 2019. The gains have by no means been the result of a bubble either. Grow Generation has executed brilliantly. Grow Generation is another ancillary provider and the largest specialty retail chain focused on the cannabis market. The booming U.S. cannabis industry has created fast-growing demand for hydroponic supplies. Number 2, Canopy Growth Corp, CGC. In October, Pittsford, New York-based flavored water company Karma Culture announced it was launching a cannabidiol-infused beverage developed with Canopy Growth. While CBD, one of many cannabinoids compounds found in cannabis plants, doesn't produce a high, it has become an increasingly popular additive to all sorts of products. Prescription discount company Single Care found in a 2020 survey that 33% of American adults had used CBD once or more. With exposure to high-margin cannabis derivative products and strategic partnerships in the U.S., Canopy is well-positioned to capitalize on federal legalization, Jacob says, pointing to the Karma Culture partnership. Canopy also has an established partnership with Constellation Brands, Inc., a powerhouse in the alcohol industry. Number 1. Jazz Pharmaceuticals. Jazz Pharmaceuticals, NASDAQ Jazz, acquired the cannabis-focused biotech company GW Pharmaceuticals in May 2021. GW's drug, Epidiolex, is the first cannabis-based medicine to be approved by the U.S. Food and Drug Administration, FDA. Epidiolex, which treats 2 rare forms of childhood epilepsy, is generating sales that are routinely surpassing expectations. While new patient starts for Epidiolex slowed slightly with the COVID-19 pandemic, the company has continued to deliver strong revenue growth. The FDA also approved Epidiolex in August 2020 to treat tuberous sclerosis complex, TSC, a rare organ disease. This approval opens up a significant new market for Epidiolex, since around 50,000 people in the U.S. and roughly 1 million people worldwide have the disease. Do let us know in the comments which one of them you would like to buy. Please subscribe to the Stock Advisor. Thanks for watching.